Welcome to Constellations, the podcast from Kratos, where industry leaders share their thoughts and experience on the future of space business, policy, and opportunity. If you like Constellations, please support us by giving a rating and review on iTunes. And don't forget to share this podcast online to help our community grow.
Welcome to Constellations, the podcast from Kratos. My name is John Gilroy, and I'll be your moderator. Our guest today is Nathan de Ruyter, the Managing Director for Euroconsult Canada. Today, we talk about non-geostationary orbit satellite constellations, or NGSOs. We'll talk about their exponential growth, the commercial and go-to-market plans, and the challenges and opportunities that lie ahead in realizing a bandwidth-filled future. Well over 50,000 NGSO communication satellites are planned for launch over the next decade. SpaceX, Amazon, Project Kuiper, SES, Telesat, OneWeb, and many other constellation providers are promising to transform the space industry with thousands of NGSOs beaming tens of terabits per second to the ground to satisfy a seemingly endless demand for bandwidth. During this episode, Nathan de Ruyter, the Managing Director of Euroconsult Canada, will share insights into the go-to-market plans and commercial strategy for these NGSO constellations and the implications from a business model, cost, funding, and ground segment perspective. Nathan is well qualified to discuss this topic based on his expertise in commercial due diligence, market analysis, financial forecasting, strategic planning. Over the last 9 years, Nathan has managed and contributed to more than 90 consulting missions for leading organizations in the satellite industry. Nathan, let's jump right in here. Some will argue that today's wave of planned NGSO constellations may suffer the same fate from those that happened in the 1990s, where many went bankrupt or were canceled. So what do you think is going to happen?
Yeah, that's a great first question, John. And actually, as you pointed out, the track record is not great for LEO SATCOMs. And obviously, I think when you need to look at it, there's some changes, I think, from the 90s. But maybe even from a bigger perspective, I think, where the investors need to understand it's a long-term game, right? And I think that's a crucial part of this business. If you want to turn around a quick buck, this is not the place to invest in. So looking what we see today, and I think what investors nowadays also well understand, that, this is a long-term commitment, long-term investments. And if you see as well, the kind of the parties leading today, looking either at Starlink, for example, they're very well funded. They've been able to attract a lot of capital over the years. And if you look at the others like Telesat and OneWeb, obviously OneWeb out of bankruptcy, but now with government support, it indicates that there's a long-term view, I think, and interest from governments naturally that are maybe better aligned with the kind of business cases that we're looking at when you talk about these NGSO constellations. But, it's a very competitive field. And if you look at the business case economics, and we can discuss that in more detail later on, but, the utilization of those constellations are very important because you have a lot of capacity coming in that needs to bring at work. But also, as you replace satellites frequently, obviously you need to quickly fill up your satellites and make the return. So, and in a very competitive field, that can definitely leads to a number of other kind of catastrophic events in terms of bankruptcy. So I would say we cannot definitely not rule out more bankruptcies in the future. But I think, the underlying, investment discipline and perspective here are maybe better matching up with what we see today than that we basically seen previously.
Well, that's good. From the commercial and go-to-market plans you've seen a bunch of them, analyzed a bunch. What makes this second wave here of the NGSOs more likely to succeed than the first? Lessons learned, or what do you think?
Yeah, I think, obviously there are some lessons learned, but I think also the market has fundamentally changed. I think, and if you go from the 90s to today and just the concept of broadband internet, obviously pretty straightforward, is dramatically changed, right? The expectations of having broadband basically anywhere, everywhere is now much more of a fundamental concept, I think, compared to so many years ago. And if you look at the numbers, right, you can look at it actually, there's kind of two ways to look at it. So one is the most obvious, I think, area for satellite is, beyond the reach of terrestrial networks, and particularly in the mobility space. So if you look at that, there are about 250,000 vessels and airplanes that are beyond the reach of terrestrial networks, and today only 15% are connected by internet. So I think that always shows a tremendous, let's say, upside potential in connecting them, and they're also typically underserved. Even if you're the crew on sea, there are not that many. They have the ability to watch their Netflix show or be able to communicate on a daily basis. So there's a lot of constraints still in the performance, and the costs are quite still significant for offering services either at sea or at a plane. I mean, we have seen Wi-Fi solutions, but they're, tend to be still either pretty expensive, and, the take-up rates are still, fairly limited. So there's a massive amount of growth in that area. And then as well, others of the constellation, they focus more on bridging the digital divide, right? And even if you have the big billion-dollar numbers of the number of people being unconnected, but, in our analysis, what we've done as well is looking at, okay, what kind of group of population would be able to afford this kind of services? And then you easily go still up to 700 million people that are still, not connected and should be, at realistically means having, financial means to pay for a connectivity service. So again, that is, I think, the two really from a broad perspective, what basically the underlying drivers for these constellations. Now, obviously, it also becomes to the question of how the satellite industry, it's not only about the satellites, but it's also bringing the connectivity service to the ship, to the vessel, and to the kind of unconnected community. And that's kind of still the missing link, I think, that where we are today. So that's, I would say, I think, what from all the kind of market and plans and commercial, that is what's driving it. And obviously different constellations, and we can talk a little bit about it later on as well. They target slightly different, they have different approaches to it, right? And that's an interesting thing to see how it pans out.
Nathan, we've done over 100 podcasts. We've interviewed people from every different aspect of the space business here. We talked to the folks at Quilty Analytics. So I'm going to pull them into this discussion here. Yep. Quilty Analytics has stated that NGSO constellations face a massive revenue challenge to gain an attractive ROI. Having to triple the entire $6 billion in revenue that the SATCOM industry generates to realize a healthy ROI. So same numbers you're using, optimistic, pessimistic?
No, I agree with this underlying kind of statement that, there's this massive revenue challenge, and it comes back to my earlier point about driving utilization on the assets. Our numbers maybe are a bit different, but I think it kind of approached the same way. And I think even if you want to another kind of great way to look at it is what, the traditional, our industry, selling industry, has generated a lot of revenue from the video side, which is now kind of tapering off. And if you look at, let's say, the connectivity, the capacity usage, there's about $10 billion annual revenue from, let's say, just from transponder capacity leasing, and 50-50 about is from, let's say, what we call now broadband versus video. But if you look at the satellite services, it's a completely different picture, right? We talk about satellite service, think about, the actual services, right, being delivered to the end users. The total market is close to 120 billion today, of which 82% actually, even close to 100 billion is from video services. So here I just want to point out is that, in that side of the business, we've been able to address a much larger market, because this 82% of the 100 billion, let's say roughly, it's really driven by about 232 pay TV subs, satellite pay TV subs in the world. If we look at it to the consumer or the current kind of broadband subscribers over satellite, you talk about 3 million people. So again, it shows that this kind of scale that we're trying to achieve in the industry is really at its early stage. And, it's really kind of, I would say, the task of the NGSO constellations to facilitate and drive that service adoption. And I already pointed out to the addressable market is there. It's now how quickly you can be able to penetrate and to deploy those services and get that money from those kind of addressable markets. But, it has been demonstrated in video, it has been done. And now I think it's a turn for the NGSO constellations and the satellite broadband market in general as well to get the similar kind of scale, to achieve the similar kind of scale as has been succeeded in video previously.
So if you had to pick one or two specific markets that are most promising, what would you pick as the most promising target for this NGSO?
Yeah, I think, the mobile broadband, like the ROIFC and the maritime, I think are naturally well aligned, because you talk about, what are the two things that they're bringing is obviously global coverage, right? The NGSO constellations, most of them, they provide global coverage. So that's very attractive, as those systems are, planes and boats are moving along. So you have one single system. You don't need the patchwork of different satellites to connect with. So there's a clear, I think, value add. And as well, the terminal cost is less of an issue because, as you also probably have heard that, on the NGSO side, currently compared to GEO, cost economics are unfavorable because you need to track the satellites. So there's, other type of equipment required. And there's many kind of progress, and Starlink is the key example. They've been clear about their path in bringing down the cost of their terminals, but definitely that has been an issue, and it's currently higher than GEO. So, but again, if you move in the mobility front, that kind of terminal cost is already more on equal basis than I would say in the fixed broadband. But then again, I think one of the other interesting markets is the government side. So either being the civil government helping to connect schools, helping to connect hospitals. There's a tremendous opportunity there, and again, you see governments more and more involved in this, and it's partly maybe generated by COVID as well, where the need for wider role kind of connectivity across the country is more and more embraced, I would say, or more and more recognized. And also governments investing into the NGSO space, so recognizing the importance, but also into more like defense military related opportunities where, again, you have your satellite assets on the roll. If there's a contract, which you not always can predict, can occur anywhere in the world in a certain area, although there's some constrained areas. The full global coverage of an NGSO constellation obviously gives you great advantages in terms of where you would need capacity when a conflict quickly emerges. So those, I would say, are definitely very promising target markets for NGSO services, and either from, as I meant, civil government, but also the military has shown a lot of interest in NGSO, and I think you would see definitely good commercial traction in those segments.
Many of our listeners are interested in revenue. And earlier in this interview, I mentioned 50,000 satellites. Now, that's not going to happen overnight. That's going to gradually build up to there. So I would think there's got to be some revenue sources maybe in the short term and in the long term. Do you see that changing over time, where the revenue sources are going to change?
Yeah, I think there's always, if you want to, think about like the low-hanging fruit or a little bit more higher-hanging fruit, I think, where we would kind of expect the first kind of take-up is migrating existing users. So I already highlighted the maritime. So there's already like a substantial amount of ships are already connected with VSAT connectivity services. So there's more of a natural migration path. I think they understand well satellite, and you would expect them to be benefiting from the better performance and the lower cost provided by some of the NGSO solutions. The other thing is obviously consumer broadband. I mean, there is definitely, if you follow Starlink, there's a quite impressive, I would say, progress they've been making. They have launched a nothing on beta service, but they're already up to 90,000 subscribers, or even maybe 100,000 subscribers now, and they have over 500,000 in kind of interested and expressed interest that paid out a deposit. So there's a clear kind of this definitely demonstrates that this consumer broadband market is there ready to be connected, basically. And obviously the Starlink brings overall to the satellite industry a great kind of tremendous marketing campaign. Even if you're not, even for other satellite companies, I think, satellite becomes much more mainstream as a solution by all the news that Starlink is generating in the general public press. So I think the Starlink effect would definitely help for some of those solutions to get more wider acknowledgement and have some adoption around the world.
Well, you're up there in Canada this time of year. You're probably looking at different hockey teams and predicting which one's going to be successful. Let's take a look at the satellite market here. So what we mentioned a few earlier, what constellations do you think have the best chances at succeeding in this just super competitive environment?
Yeah, it is very, very competitive. And I do mention, though, it's very competitive as some, they target a little bit more different fields. And it's also partly because their architecture kind of a bit different, right? So I think the kind of general kind of challenge they would have, would, if their focus on the specific market is sufficient to build your business case. So take Starlink, for example, right? They clearly went out of this and have the prime market focus was the consumer broadband, right? Connecting individuals. But obviously now they're making some changes in their design, and they also have expressed interest in moving into other segments like mobility and so on. So I think, that's going to be the challenge across the board, where that a single market probably would not be sufficient to generate the returns, especially as you pointed out, the 50,000 satellites, those are not all going to stay because, you need to replace all the time, right? So that's a lot of replacement satellites in that number too. So that's why I think if you look at the different system architectures, what we typically, and it really varies the attractiveness, we call it the vertical market fit, right? If you look at the technology and what are the requirements from an end user. So if you look at O3b mPower, for example, or O3b, the first generation, it's very well positioned to attract kind of the high volume users. So think about a cruise. So they're really like the multiple Gbps kind of users of massive amount of people on a ship that would like to use connectivity. And also, for example, oil and gas side. So again, really that with free video surveillance and significant crews on the offshore rigs. Those are kind of very high user requirements that are best served by a system like O3b, but also like Telesat actually. Telesat Lightspeed has a similar kind of architecture. So those have the ability to provide a lot of capacity. And on top of that, what Telesat can do on its Lightspeed with the technology is to bring a large pool of capacity over demand hotspots. So, and that's, for example, very important if you think about an airport, right? Let's say we connect all airplanes in the world, right? Then those airplanes fly out, but most of the concentration of the airports is around let's say 200, 300, 400, 500 kilometer radius around major airports. So think about all those connected planes, that all the demand very close to the airport is going to be quite substantially massive amounts of capacity requirement, right? So your architecture then needs to be kind of designed that you be able to pull or push this amount of capacity into those airports. So that's why the Telesat design is really more geared to do that, while other designs have maybe a bit more different approach to it. So again, it really differentiates a little bit. So I think, in markets like Aero, for example, I think the Telesat design is very interesting in that perspective, but it doesn't mean that OneWeb, for example, can serve business jets or maybe other type of airlines. So it doesn't really exclude one or the other, but you clearly see some, let's say, NGSO constellations that have a better fit in terms of their technology to the requirements in a specific user segment. So, and that's why you have a quite diverse kind of array of different players into the market, because again, these user requirements change quite dramatically from one to another.
I think each one of these players is going to encounter different obstacles in being successful. I mean, everyone's got a little niche, as you talked about. They have different fit in different specific areas. But there are big obstacles that you can name. I mean, is a typical obstacle funding, or is an obstacle regulations, or is it economic, trying to figure out what the market's at, or is it is it a technical factor? What do you think the obstacles are going to be to overcome that?
Yeah, and that's a good question. And I think actually, this sometimes changes a little bit, because I think a few years ago, I would have said funding would be still a significant factor. But where we are today with, tons of funding sources, you see the market, there's, even from SPACs to different type of funding sources being available today. Funding at this point seems to be kind of the least of the issues, I would say. So where we kind of focus most of our attention to in terms of what are the challenges, I think it's really into the distribution and market access. So I think generally these constellations have done a great job to, have the technology development, have the constellation program on the go. You're all basically ready or starting to deploy the services, but now to scale up the service, it's all about distribution and market access, because at the end, we're talking here about a massive amount of capacity, but also global service delivery that you need to achieve. And that's something, there are not many companies or, let's say, business plans that start from day one with have a kind of a global reach. So, and in order to kind of fulfill your business plan, you need to be able to access all those markets. And again, it ties a little bit into your regulatory point, and some of the markets are more straightforward, but when you move in a big area like Asia, a lot of regulatory market access challenges are apparent in the market. So very interesting to see how they go around this, because again, the beauty of the satellite in that sense is that when the satellite is up, you have a global service being available, but it doesn't mean that this service is accepted to be delivered in a country like Indonesia or Pakistan or Burundi, right? There's all regulations that they need to navigate. And then to, let's say, okay, there's this connectivity available, but to get an actual terminal on a school in Zimbabwe, there's a lot of field work and commercial development and distribution of the terminal and all the kind of nitty gritty that needs to come around with that. That's still a bit of a challenge. So And how do you manage that? I think, across multiple countries at the same time when you scale up, that's the interesting part. And we'll probably see a lot of distribution agreements. Hopefully the mobile network operators that are big parties in these countries can play and work together. And that's, I think, one of the things that satellite industry has probably missed in previous years. The kind of collaboration, partnerships, working together with terrestrial partners and be more integrated into the networks will be a tremendous opportunity for our industry to, become from the niche and the 3 million subscribers that we have today to hit the 200, 300 users, right? So this is what is required to make our case and to become commercially successful.
Earlier, we talked about competition. We know it's a competitive environment. I guess we're focusing on the NGSO Constellations folks all competing with each other. But let's not forget, there's big dogs out there, Some of these people plan on competing with these big terrestrial broadband providers. I think they're competing against them. So can they compete effectively with these bigger companies and price, service, reliability? Can they really go up against the big dog and think they're going to win?
Yeah, no. And I think, in that sense, there's definitely... satellite will always remain the smaller brother compared to the terrestrial world. But there are clear, I would say, cases where we see that satellite, based on the business economics, satellite can win, right? So we always talk about more rural, like more on the edge kind of delivery of connectivity. So not necessarily into the cities, but even if you look at different kind of total cost of ownership economics, there are quite a number of instances where satellite become more cost efficient than microwave or other kind of solutions. So there is definitely a right to win of satellite in providing connectivity into the more rural areas, the more unconnected areas. But again, I would say, and that's hopefully as well with the kind of this move into the 5G environment where it sometimes a little bit feels like satellite versus terrestrial. And I think that's something that the industry, I think, would try to more break and bring more convergence to the networks. And the trends of software-defined networking is really moving in that direction too, actually. So at the end user doesn't really care that much, right? And even if you think about from that perspective, and with all the kind of software-defined networking built around it, if then if traffic can be routed over terrestrial, satellite, or NGSO or GEO, that would basically be then decided on the network, the best kind of algorithms and analytics built around it. That would be kind of the holy grail, I would say, to really have this orchestrated network where it all fits in together. So again, yes, we'll be able to. We'll still be kind of competing with terrestrial networks. Some places we'll lose. There are some pockets of areas where we will win, but the bigger thing is to be more integrated, to work together, and find the most cost-efficient solutions across the network for both instances.
I'm sure, Nathan, if you go to the next couple of satellite shows, people in the aisles will be talking about NGSOs. We know that. But what about, the old folks? What about the traditional GEOs? What role are they going to play in this whole market? You talked about that earlier about trading off big brother, little brother, kind of depending on what they need and work with each other, or are they going to go after it head to head?
Yeah, no, it's a great point. And I think, I was even looking recently in some of our numbers, and it was quite surprised by, if you look at just, in the sheer volume of total capacity, right? NGSO is really starting to take over in the next coming year. Like 80% of the total supply by 2022 is to come from NGSO. So it really feels a little bit that GEO is going to be knocked down, right? Still, I think there's a different perspective to it too, because at the end, it doesn't always matter what is the biggest pool. It also, where can you bring the capacity where it's needed? And there, GEO has really take up on that kind of challenge as well. And we see this kind of completely new trend in GEO, what we call software-defined satellites, and standardized software-defined satellites. So that does do two things. So one important word is standardized, which I think is important because, traditional GEOs were all custom made, and, that just something custom made is more expensive. Now, obviously, NGSO is much more uniform, trying to repeat and much more cost efficient in a certain way of production. And some of those elements, they're now translated into GEO. The second thing, what is important, is this the software-defined element to it, which really give you much more flexibility, because the 15 years versus 5 years a lot of things can change. But these software-defined satellites can completely reconfigure themselves. So in terms of orbit coverage, even some frequency bands. So there's much more flexibility built around it. So there's definitely not, I would say, a lost case of GEO. And as you pointed out, there's legacy, but they have been definitely adapting and implementing some of the new technologies as well to become competitive. And then you still have the big boys like the ViaSat-3, the very big satellites that in terms of cost economics are very comparable to NGSO, and even in some cases, I think even more cost competitive than NGSO. So there's certainly, there's certainly competition from GEO, but it's clear, with all the wave of NGSO, we've seen a drop in GEO satellite order. So it's going to be interesting to see. I think some of the operators as well, like SES, for example, they adopt this hybrid strategy, right? There's this role for both as well in the fields. But GEO is still there and definitely working on being more competitive and bringing more value to their customers.
A trending word in the satellite community is the word sustainability. And if I bring up the fact of 50,000, like earlier in the show, people can go, well, hey, wait a minute, Nathan, wait a minute. What about interference and what about space debris? Is this going to contribute to the problem, or is this going to be managed better than we had in the past? So sustainability, this big number, what are your views?
Yeah, no, I think it's you do hear it as well in conferences, and I'm pretty sure in the upcoming concerts will be continuous debate. This is more and more getting attention, and I think it's very, very important because we want to avoid that there is going to be a catastrophic event really happening of a collision or something before we really take action, right? So I do think there are some, parties have expressed their willingness to be very disciplined about this, but I think there needs to be some kind of rule set in the domain. So at least, we can ensure that, with the continuous increase in new satellite launchers that we can protect the space environment. So clearly this is, I think, one of the things that is well recognized. It's just a little bit hard to see who's going to take the lead and how it's going to be implemented, right? So this is something that people are still trying to think around it, but I think generally people see the urgency, and it's better earlier than late to make these rules of the game clear to all of us. So definitely a growing concern, and something that needs to be addressed in the next coming years.
Well, Nathan, it's crystal ball time. Why don't you get that crystal ball off your shelf and polish it up and look 5 years into the future? If anyone in the world can predict 5 years, we're going to ask you to predict 5 years in the future. Bold predictions here. So what do you think is going to happen? Give us a straight scoop in the crystal ball.
Yeah, even in our reports, we have to forecast 10 years. So imagine what that crystal ball
10
looks like.
10 years. Whoa.
Yeah. Oh boy. But 5 years. Yeah. I mean, I think 5 years from now, this is going to be, the next 5 years is going to be do or die basically for this industry, right? Because I think I already pointed, it's a long-term game, but in the next 5 years, you need to see this commercial progress, right? That there is the adoption. So we identify the latent need for connectivity. Now we need to see that the constellations are able to bring the connectivity to the ships, to the unconnected people, and being able that the services being used, scaling that up. So that's kind of the crucial part of it, and you still believe that is possible, right? That is, and the only thing that I think in general, or maybe your consult perspective is, and maybe a bit contrary to some of the others, is that we always feel that the timing part, it sounds 5 years long, but for some of these programs to really, set up a school program in an African country, it's often 1-2 years of planning and development. So there is these longer time frames. So I think, we hope to see the progress. I'm still pretty sure within 5 years from now that people might consider that it has not met the initial expectations, right? Because I think it's a very long-term game. It's probably the 5-10 year game that we need to look at it. But, hope to have seen it work out for most of it. I think we'll see probably some consolidation because there's so many different constellations out there, and there's different approaches to it. And as I said, depending a bit on the market. So I think everyone would test the waters. We'll probably see who crack the code, not only in orbit but also underground. And based from that sound, we'll probably see some merging and integration of some of the capabilities going forward. I think a standalone of 5-6 constellations is maybe more difficult to see, but there is a definitely need and a place for NGSO constellations from today to 5 years into 10 years. We're pretty confident that will be the case.
Nathan, it's very difficult to present a perspective on these NGSOs because there's so much going on, but I think you did a great job this afternoon. Really, you hit a home run, if they say that in Canada. We say that down in the United States. I'd like to thank our guest, Nathan DeRuiter, Managing Director of Euroconsult Canada.
Thanks for listening to Constellations, the podcast from Kratos. If you like this interview, please subscribe, tell a friend, and give us a review.